Securities and also the company, we welcome you to our fourth corporate day of the year, which the sector that we feature today is oil and gas. Today we are going to feature you Reservoir Link Energy and also T7 Global, which both are actually in our coverage. So before I move forward, there are a few what do you call announcement that we need to make. Okay, let me run through you the itinerary for today. The itinerary for today, we will start with doa shortly, and then we'll begin with the opening speech. Then we proceed with economic presentation and then oil and gas presentation by our oil and gas analyst, Azim, and then Azim Faris, and then we will continue with Mr. Tien, which is the Executive Director of RL Energy. There will be 15 minutes, the presentation, I think about 1 hour, and then we'll proceed with 15 minutes of Q&A. Um, Now, a bit or two on RL before we move. We are seeing a hive of activity for RL based on the energy book released by Petronas. There will be Petronas will be drilling about 96 wells from 2023 to 2025, and we think that will be a hive of activity for RL. As for T7, they will start at 11:15, also 1 hour and 50 minutes Q&A now. Interestingly, T7 order book in as at end 2022 reaching 2.6 billion. I think we will divulge you more information later. So before that, there are certain announcements that we need to make. For those who are having a CPE, attending this webinar for CPE points, do fill up your pre-assessment and later post-assessment. Now, this what do you call the post-assessment will be open from 12 p.m. It will be closed within a week after the webinar session, which is on the 23rd of March. A week from now, I think about 13th of April. Now, kindly use your full name in the WebEx app, and also note that all learning material have been uploaded in the platform. For those who register for learning hours for Bank Islam staff, kindly scan the QR code, which will be shared later for attendance and course evaluation. We will give you the QR code later. Now, moving forward, as I mentioned, the itinerary. So let's start. Alhamdulillah, let's start with the baca doa. The month of Ramadan. Let's get the blessing from Allah. Azim, over to you.
الفاتحة. بسم الله الرحمن الرحيم. الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين. اللهم إنا نسألك لسانا رطبا بذكرك وقلبا مفعما بشكرك وبدنا حينا لينا بطاعتك. اللهم إنا نسألك إيمانا كاملا ونسألك قلبا خاشعا ونسألك علما نافعا ونسألك يقينا صادقا ونسألك تمام الغنى عن الناس. هب لنا حقيقة الإيمان بك حتى لا نخاف ولا نرجو غيرك فلا نعبد شيئا سواك واجعل يدك مبسوطة علينا وعلى أهلنا وأولادنا ومن معنا برحمتك ولا تكلنا إلى أنفسنا طرفة عين ولا أقل من ذلك يا نعم المجيب صلى الله على سيدنا محمد وعلى آله وصحبه وسلم والحمد لله رب العالمين آمين يا رب العالمين.
Thank you, Azim, for the dua. Inshallah, we get the blessing from Allah, especially Ramadan. This month is a Ramadan month. Okay, on behalf of CEO of BIMB Security, Encik Kamul Zaman, I would like to give a speech or two on to grace the event. Yeah? Encik Kamul Zaman has been, he's actually currently having a board meeting. So let me give an opening speech on his behalf. Now, oil and gas sector is actually, in our opinion, is having a very bright future, mainly because we are seeing a lot of support. One, the capex, they have been under investment for oil and gas sector upstream since before COVID. So when there is a shock, a financial shock or shock in the system, so we saw how the oil price shoot above USD 100, USD 100 per barrel. So that is actually not healthy, because that will result in inflationary pressure globally, which what we are seeing today. So in order for inflation to be contained, there have to be a lot of capex investment in oil and gas sector. So this is why the impact is actually going to trickle down to the players, including RL and T7. Now, 2 days ago, we were actually there was an announcement that OPEC Plus will undergo supply cut to the tune of 1 million barrel a day beginning May. Now, this will be led by Saudi Aramco for about 500,000 barrel. Then combination of Saudi Arabia, Iraq, UAE, and Kuwait, the cut could reach up to 980,000 barrel per day. Now, this does not include other key players, Venezuela, even Russia, if any. So we think that it's going to be more than 1 million barrel a day. Now, this would be very supportive of oil price. Now, oil price yesterday closed, I think, Brent close to USD 85 per barrel, pushing year to date close to USD 82. Now, this is we are seeing more pressure in oil price in the second half. Why? One, because winter season is coming in the northern hemisphere. If you look at historically, second half oil price is more stronger than the first half. Additionally, we expect US dollar to weaken in the second half. So when US dollar weaken, there is a correlation with oil price. So oil price second half is likely to be much stronger compared to first half. Now, Bank Negara and MOF, they have a projection of Brent about 90. Our projection is between 90 to 100, which we think is possible, mainly because year to date is only March, is only early April. Year to date price is only 82. So this does not include the supply cut by the OPEC Plus that is planned beginning May onwards. Now, what will happen to inflation now? It's true that what you call energy cost is excluded from core inflation. However, the secondary price effect is real. So that's why we think that why Bank Negara is actually giving the forecast for inflation, the range is very wide, 2.8 to 3.8%. So we think that as a result of the pressure from oil price in the second half, that inflation will remain elevated, elevated, that we think that is going to be above 3%. Now, in addition to Bank Negara projection, they expect labor market to also improve in the second half to end the year at 3.3. So essentially, Malaysia will be maintaining its full employment. So as a result of that, there could be demand-driven inflation, not only cost push but also demand-driven inflation, pushing inflation to be above average. Now, we if let's say that subsidy rationalization is actually implemented next year, so inflation is likely to be elevated next year too. So that is the thing. Now, what will happen, or what will be the benefit for the players like RLT7 or stocks that we cover? Now, based on the findings or announcement by Petronas in their activity book for 2023-2025, the impact is actually very significant to the what do you call, to the secondary player. So particularly for example T7 for their MOPU, for their platform maintenance contract, for R7 because they involve in well related activity. Now imagine if Petronas is going to drill close to 100 wells until 2025. So obviously RL will get the benefit of that lah. And in addition to that, not only 96 well will be drilled by Petronas, they also plan to increase the work over 21 wells for work over, meaning to increase the production of 21 wells, and 28 will be undergoing decommission. So this will trickle down to RL per se. So that's why we think that our investors should get what do you call the input, or what do you call the guidance, the direction from the company themselves, which is Mr. Tan for RL and Mr. Tan for T7. Now, without further ado, we thank you for spending your time. I think maybe up to 1 o'clock today to hear from these two players, which is T7 and also RL. And we hope that you gain as much, you enjoy, and also gain as much as we do in this event that we have prepared for you. So again, if you have technical issue, or if anything at all, you can see from the chat box that you can contact us at 26131741. If you have any question for Azim, for Imran, for our economy, for T7, for RL, you can write in the chat box, and then we will, or I will actually convey the question to those company, or you can even ask from Mr. Tan or Mr. Tian themselves. So on behalf of the CEO, we welcome you, and hopefully, what do you call this, will be an avenue for you to be a very informed, make an informed investing decision for your fund or for all your clients. Then thank you, and with that, I will pass to Imran to give his view on the global economy and Malaysian economy. Imran.
Okay, Assalamualaikum warahmatullahi wabarakatuh, and very good morning. Uh, we start our economic presentation on the global economy. Basically, I think what we saw in 2022, the economy ended on a stronger note than what we expected. So those GDP growth numbers have moved higher, and higher growth in 2020. We also expect slightly slower growth in 2023 as compared to 2022, but uh, in the past few weeks, there has been revisions to the global GDP growth. It was revised higher, and the higher growth basically reflect the ongoing strength in services and labor markets. The momentum basically pushed the downturn into the later part of 2023 and spilling over into 2024. And inflation also correspondingly higher on average given the growth and stickiness. And if you look at the country itself, basically we think that both the US and Eurozone will grow by small but positive trajectory. And on the UK, we still expect to still weak, but China's growth forecast has been revised higher. And so overall, global growth should tick up to about 2.6% in 2023. However, the financial market turbulence in March ignited the collapse of Silicon Valley Bank in the US. That had threatened to disrupt our story of protected lending with higher policy rates for longer on both sides of Atlantic, which are US and also Europe. And the market turmoil led to forceful and apparently successful policy response that now highlights the competing forces and financial fragility against the resilience of the real economy. So momentum for the real sector remains surprisingly resilient through the first quarter of this year. And this was particularly true in the service sector, where continued spending boosted by tight labor markets, strong wage growth, and savings buffers propelled growth. The goods sector performed less well, reflecting both some softening demand following the COVID-19 related boom and higher sensitivity to the sharp increase in interest rates. So overall, growth across the advanced economies continued to defy predictions of a sharp slowdown or outright recession. And I think China's fast rebound also added an extra boost to the global growth expectations. And if we look at the supply chain in the next slide, basically supply chain disruptions have become a major challenge for the global economy since the start of the COVID-19. And when we look at the Federal Reserve Bank of New York Global Supply Chain Pressure Index, which is a global measure designed to capture supply chain disruptions using a range of indicators, the index showed the global supply chain have returned to normal with pressures dropping to the lowest since before the COVID-19, where it fell to negative 0.26 in February, and it is basically close to historical average of negative 0.29. So the recent movement in the global supply chain condition suggests that global supply chain have returned to normal after experiencing temporary setbacks and around the turn of the year. But while growth is proving to be quite resilient, underlying inflation pressures are proving to be quite persistent. As a result of the stronger for longer macro activity story, core inflation has remained sticky, although overall inflation has peaked. And to be sure, some countries are starting to see a more noticeable slowing in underlying inflation. But the core inflation still remain high. But if we look, for example, in the UK, in the Europe, the February core CPI increased 5.6%, and it was the fastest record. And in the UK, the core CPI in February quickened to 6.2%, while in the US, it's still elevated. So this reflects the composition of recent growth, which has been concentrated in the services sector where labour markets have been tighter. The implication is that financial conditions, which are given mainly by policy rates, will need to remain tighter for longer. And I think the combination of persistent inflationary pressures and growing financial strain pose something of a dilemma for global central banks. And I think if we look at the central bank's move in March, we think they will continue to raise interest rates in response to the macro outlook despite the recent market turmoil. And baseline forecast inflation and also inflation expectations remain above target for most central banks. And this implies that financial conditions need to tighten further, which in turn calls for higher policy rates. For example, if you look at the Federal Reserve, in March they increased the Fed fund rates by 25 basis points, and it may now peak at 5% to 5.25% in May by May 2023. And ECB also delivered a 50 basis point rate hike in March monetary policy meeting, and expectation is the ECB will continue to increase the interest rate in May by another 25 basis point, and is similar to the BOE, Bank of England. And I think, but there are several central banks where we believe rate hikes have already finished. For example, Bank of Canada, Bank Indonesia, Bank of Korea, and even Bank Negara Malaysia. And that has been this week recently joined by the Reserve Bank of Australia, where they also decided to lift the cash rate at 3.6% on Monday. So I think overall, taking account differing implication of persisting inflation pressures and emerging financial strains, we still believe the peak in global interest rate is near, and that most, if not all, central banks will end their rate hike cycle by mid-2023. But we still don't anticipate most central banks to ease monetary policy settings in 2023 before the Fed clearly signals the intent to also do so. And basically, I think there's virtually no place to hide across the region, and the risk that we face in 2022 will remain and dominate the 2023 as well, especially the inflation, the tightening financial conditions, the geopolitical uh, issues. I think the financial turbulence that erupted in early March was triggered by losses from the realization of interest rate risk in the health majority portfolio at at the SVB. And I think geopolitics is still with us and continue to be source of downside risk. And more broadly, the Russia-Ukraine conflict continues, as do the US-China tensions. So both of which are source of tail risk. And domestically, considering the external headwinds, global financial uncertainties, and tightening monetary policy in many economies, I think Malaysia GDP is expected to moderate to 4.5% from 8.7%. The softening growth is mainly due to the acceleration in external trade performance, as global demand is anticipated to be slower than the previous year. And on the back of the higher interest rates, banking turmoil, and elevated inflationary pressures, domestic demand in the US and in the EU and other advanced economies will likely dampen in 2023. And that will also have impact on the Malaysia's real exports. And on the flip side, we believe that China's sooner than expected reopening provide a silver lining to global economy, and the reopening will also boost Malaysia services exports as well as tourism activity. So domestic demand is expected to remain solid for the year and lifted by robust labor market conditions and household income, the continuation of large-scale infrastructure projects, and also pick up in tourism activities. And with demand expected to continue growing, most economic sectors are projected to expand at a more moderate pace, amid the expectation of a slower global growth and normalization from the high pace of from the high growth recorded last year. And we also expect employment and wages to improve following various measures to increase employment and also boost income. And on the OPR, we maintain our forecast that we maintain that OPR will be at terminal rate 2.7%. So we don't expect to see any hike in OPR by negara, but it's still uncertainty, and all depends on data that will be coming in, and also what happened to the global economy, and also the other central banks movement as well. And on inflation, we maintain our forecast that headline inflation expected to be at 3.4% in 2023. But I think robust domestic demand coupled with negative real interest rate would continue to fuel core inflation pressures in the next few months. And we remain watchful on the potential development of domestic policies. Based on the latest news flow, the Ministry of Finance is considering lowering electricity subsidies for high-income households by second half of 2023. And then there's also a talk about targeted subsidy for diesel, which might be considered as well, but the timing of the implementation remain uncertain. And besides that, government may also review the subsidies provision to chicken breeders and egg producers by June this year. So on the ringgit, basically there are no changes in the directional view of the greenback. Where we expect the USD to weaken, especially in the second half of the year against most currencies. And in the near term, some USD strength could prevail as market reprice the path of the Fed fund rate and price out policy rate cuts in 2023. And we saw that the ringgit strengthened by about 1.6% by the end of March to close at 442 and partly erase some losses incurred in the preceding month. As investor focus have shifted towards less aggressive Fed stance, it provided some supports for the local currency. And moving forward, the volatility in the FX market space is expected to persist by extreme downside risk in the ringgit mitigated by favorable fundamentals and end to the Fed rate hike cycle, which is we believe is drawing closer. So I think despite the volatilities from the external front, we think that the risk to Malaysia's economic growth itself are limited, and the domestic economy is holding up relatively well in our assessment, which would partly cushion the slowdown in external demand and underpin the continued reliance on the economy. I think that's short brief on the economics.
Thank you, Imran. While Azim is uploading his slides, yes, indeed, we think that most central banks already reached their terminal rate. Therefore, like what the announcement by Bank Negara, they mentioned that the impact to cumulative increases in OPR to inflation may take up to 2 years. So they do not to overshoot or undershoot on the what they call benchmark interest rate, so that kalau they overshoot, uh, probably they're gonna what they call choke the growth engine of growth, which is private consumption. Now private consumption is set to moderate from over 8% to 6.1% this year. So kalau kata dia increase too high or sharp, the OPR let's say to 3.25, that could actually strangle our engine of growth, and hence our GDP growth projection of 4.5%. So we think that based on the current situation, OPR already reached the terminal rate of 2.75. However, this is subject to evolving condition that we may see in the second half. Among others are actually global growth, or whether tourism activity is actually stronger than expected. So we will advise our client in due course. Now, Azim is already in the lobby. I think he's very eager to do his presentation. Over to you, Azim.
Okay, thank you to Dr. Nani. And good morning, everyone, and Assalamualaikum. My name is Azim, an analyst with BIMB Securities. So I think today I will share with you some of the outlook of the sector, and I will start my presentation with a brief outlook on the oil price, and to be followed by why we think that it's still attractive to accumulate on the oil and gas stocks, and I will wrap up with some of the stock recommendation. And so now for first of all, I think everyone already realized that last year oil price went up to above $100 per barrel, and which is mainly due to the war between Russia and Ukraine. And even though now the war is still ongoing, I think it's quite shocking to me to see that oil price drop below $80 per barrel for a few weeks ago. So, but I think if we really look at some of the fundamental data in the industry, actually it's only fair to see the oil price to normalize at current level. From this chart, you can see that actually US oil production also rose to around 12 million barrel per day right now. If you recall back during the COVID times, right, people are talking about US company cannot really recover from the low of the COVID-19, because they say US companies are now shifting their priority towards making dividend payment to the shareholders rather than pursuing the growth in production. But anyhow, you can see from this chart, actually their production is still rising. And similarly for the Russia, people also are very concerned with the sanction on the Russia, that the oil market will be in large deficit. But you can see that from this chart, the impact is actually at the beginning of the sanction only. And then after a while, Russia actually managed to secure alternative buyer to their oil supply. So that's why, because of this higher supply from both US and Russia, I think the market is actually well supplied during currently. And also on the demand side, I think there is also some weakening in demand because of the challenges in the macro outlook. Now, the high of price also, consumer is affected because of the high of price, and with the higher cost of living, and also the Fed is rising the interest rate. I think everyone, the consumer is affected by this cost of living, and this has impacted the demand. So in the next slide, you can see that actually the inventories in the US already rose to close to 470 million barrels, which if you compare to the past 5-year level, now the inventories already above 5-year average. Last year, the inventories are actually at the 5-year low for the most of the time of last year. So from the traders' point of view, it is actually fair for the oil price to normalize at current level. Nonetheless, I think the upside to the oil price remains, because I think if you look at from the supply side, higher oil production from US and Russia may be not sustainable. Taking for example Russia, even though they still can maintain their production right now, I think there could be some challenges for them to maintain the investment in the development. So over the long run, I think there's still some impact to the production because of the lower investment moving forward. Similarly to the US, there is also a downside risk to the production. You can see from the next slide, the number of drilled and completed wells actually at very low level, which is around 5,000 wells. So actually the rise in the production that we see currently is actually from the completion of existing wells, not really from the drilling activities, rising in the drilling activity. So and if you see at the chart at the right, now the number of oil rigs already declined because of the lower oil price. So this chart is actually showing to you that actually the US drillers actually response to the oil price at the time, like 6 months lagging to the oil price. And then I think I need to reiterate again that our base case for the oil price for this year is around $90 to $100 per barrel, which is slightly higher than first quarter average of 82. But I think this is largely similar to the consensus, whereby the consensus is expecting a stronger second half of this year. Our forecast also is largely similar to the World Bank forecast at $92 per barrel. But this one is actually based on the reports that they produced they released in October last year. So what is the downside risk to our oil price assumption? I think now people are talking about the possibility of global recession. And if you look at in the previous recession in 2008, demand for oil actually did decline by around 2 to 5%. Even though it is quite marginal, but actually the impact to the oil market is very tangible. You can see the oil price drop from 140 to around $40 per barrel. So I think since now we are still using our base case is that there will be no global recession this year. So I think we should highlight that there's still some risk to that. And then for us, actually it's very simple. If let's say the oil price is dropped, but if it can stay above $60 per barrel, I think it's still very constructive for the oil and gas companies to continue to develop with their development projects. And you can see that actually in the next slide, most of the oil and gas company already have their own planned projects for the next 3 years, and it is expected that the AMP capex will increase again. And this is also similar to Petronas. Petronas also mentioned that they will spend around 300 billion ringgit over the next 5 years, which is equivalent to around 50 billion ringgit, 60 billion ringgit over the next year, which is like last year, they spent around 50 billion ringgit, which is meaning there is around 20% increase in terms of capex. And I think it's worth to highlight here is that in the next slide, there is actually a very urgent need for Petronas to really execute its planned projects, because oil production in Malaysia in 2021 is already at the lowest level within 30 years since 1990. So if they wants to maintain the production, they really need to execute their capex plan as planned. And also in the next slides, I think I have shared before that Petronas also has set its production target, which is the upstream ambition 2030. They want to increase local oil and gas production to 2 million barrel of oil equivalent per day. Now the production is around 1.8, meaning there is increment around 10%, which is this amount of increment actually is very large, similar to previous upcycle. So if Petronas wants to achieve this target, they will need to spend as much as they did before, which I think is very positive to the oil and gas service companies like RL, T7, Dayang, and MMC, Velisto, and others. So on the next slide, so I just want to wrap up that we still have buy call. Our top pick right now is Velisto, which currently enjoy, I think, a higher daily shutter rate because of the shortage in the drilling rigs. And also we have our topic also is MMC, which should benefit from the higher capex. And most of our coverage in the upstream, actually we have a buy call, Sapura Energy, T7, RL, Dayang, and others. So I think that's all from me. I will pass over to Dr. Nani again. Thank you so much.
Thank you, Azim. Full of numbers, as usual. We are very happy that Petronas is increasing their yearly capex from 50 to 60. So definitely it will trickle down to the players. Among others that we see will benefit is T7, RL, Velisto, MMHE, those even Petra Energy. And we recently release a non-rated report on Petra Energy because we don't cover the stock yet. So, however, we are very positive. We are seeing that the government commitment to increase our production, which again is actually historical low. So that is actually a very concern because we do earn a large amount of money from our what they call export or net export in oil and gas. So I think Mr. Tian is waiting in the lobby. Is it so, Azim? Is it, Azim?
Yes, yes.
Okay. Now, the first presentation of the day, the company is RL, Reservoir Link Energy. They are involved in well-related activity and RE projects. As I mentioned before, Petronas has released their what they call drilling activity for 2023-2025. They are set to drill 96 wells and also work over for 21 and decommission 28. So this will have a direct impact on RL. So now Mr. Tian is the non-independent executive director of the company since 2014. He started his career in 1989 with Halliburton. He maintained with the company until 2007 before he set up his own company, which is Timi Resources. So he is responsible for developing, implementing growth strategies and the group's vision and mission and value. He also of course, in charge of maintaining the relationship with the customers and principals. Again, you can refer, while you listen to the Mr. Tian, you can refer to all the reports that written by Azim. And if you have any question, If you can ask Mr. Tian yourself, or you can put in the chat box. We will deliver the message or the question for you to Mr. Tian. Okay, Mr. Tian. Without further ado, if he is at the lobby, you can upload the slides, and the floor is yours.
Hi, good morning, ladies and gentlemen. Without further ado, we should start the corporate presentation. Next slide, please. Disclaimer, next slide. So we go through our company overview and the rest of what we do, and a little bit of our financial and looking forward. I mean, the forward looking of Resolink. Okay. We are essentially started as a oil and gas well services in the upstream back in 2018. We grow ourselves over the years and got ourselves listed in 2021. And from there, we expand into renewable energy as construction in solar mainly. By the virtue of the merger acquisition, we are now the largest large-scale solar construction company in Malaysia. In part that we are actually installing the solar farm. So you can see our outlook right here. We have two types of contract in our oil and gas. So we have a core contract and we have a umbrella contract. So in oil and gas, we have a contract value of 136 million. Renewable energy, we have 68 million. Total of 25. 5 are umbrella contract in oil and gas. Renewable is total of 19 contract. As our revenue here from fiscal year 2018 to 2022, there is a steady growth. As like to point out here, we recently changed our financial year to June 2023. So this time will be a 18-month financial year. We have our service center in Labuan and Kemaman HQ in Kuala Lumpur, and a service office in Miri. Tender book wise, for oil and gas, we have 462 million, and renewable energy 199 million. So for the oil and gas contract, we are currently bidding 27, renewable 24 contract. Next slide, please. Board of Directors, our chairman, Dato Taihi, he is the CEO of Pansa Berhad, another listed co. My longtime business partner and Dato Wan is our CEO. Myself and our independent director, Jack City, lawyer. Elaine Lokman, she's a founder of Ata Plus, and Dato Ahmad Rizal. Thanks. Next. Okay, recent business updates. For this is from June 2022 to January 23. Those have the green leaf. Those are related to renewable energy, and the oil bearer is oil and gas. As you can see, we are aggressively expanding our RE reach. There is a lot of contract that we secure for our renewable energy space. Next. Okay, two segments. Oil and gas mainly in production enhancement, for assurance, well abandonment, production services, well intervention, testing measurement, well construction, some new tech that we participate. In terms of RE, we are doing all the engineering work. Even though we don't advertise as an EPCC, but we do have an engineering capability. Our client are major EPCC such as SolarVest, Sam Eden, Side Park, and recently listed Sunview Group. Those are our clients, to name a few. And our strong field is in solar energy construction installation. So the EPCC will award all their subcon, and we actually build the whole solar plant for them. They do the engineering procurement, and we actually do the construction and commissioning for them. A lot of rooftop, and we have a capability of doing hydro, geothermal, and biomass. Next. Next slide, please. Sorry, go back one slide. Yeah. Okay. On the oil and gas supply chain, we are actually involved from the whole life of the oil wells or oil and gas well life
20
cycle.
something.
From sorry.
Yeah.
Okay, so we do well testing, well preparation, wildlife services for exploration, appraisal, development well, and also production well. And in production well, we do well leak repair and oil and gas production enhancement services. In P&A, we do perf wash and cement. And we work for all the PSC, Shell, Exxon, Petronas, Hess, PTTEP, and we also support other service providers such as Dimension Beat, Delium, Halliburton, Schlumberger, USMA, to name a few. We oversee operation. We do work for JVPC, Petro Vietnam, Petronas, China, Mauritania. Next. A little bit about our collaboration with Sunsip. Sunsip is recently acquired, I think 1.5 years ago, acquired by EDPR. EDPR is Portugal EDP, their national energy company. EDPR Sunsip is our partner in Malaysia to do a rooftop investment. Next. Our track record in solar, we have already done more than 500 megawatt, including those are ongoing for large scale solar. This is actually what our stronghold is. What our majority of client is building large scale solar for LSS4, since LSS1. Next. Okay. For our financial. So we grow from 45 million to 112 million in 2022, and we at December we are recording a 97 million revenue, and for the 12-month December we actually still have a negative of 861 due to the slow activity, mainly in oil and gas in 2022 first 2 quarters. Next. And on the quarter-on-quarter analysis, so if as you can see, renewable energy now took up a large portion of our revenue contribution. So in Q4 2022, oil and gas is 4 million, renewable is 19, whereby as you can see, the oil and gas GP is slightly higher than the renewable. So we recorded 6.2 million gross profit in Q4 2022. As compared to Q3 2022, we recorded 41 million revenue and 6.3 million gross profit. Next. Breakdown revenue by business segment. Again, you can see for Q4 and fiscal year ending 2022, the renewable energy took out a huge 60% of the rest. After that will be perforating and well repair, oil and gas production and well testing. But looking forward this year, the well testing will be picking up. So the activity for well testing has been picked up this year. We have 2 package of well test equipment working concurrently. Next. Our financial position, 128 million total asset, and net gearing is still at 0.18, current ratio at 2.1. Next. Our future plan, what we are doing is we are changing our business from a pure service provider to a concession owner and service provider by investing into solar, rooftop, hydro, and wastewater treatment concession. These are all concession business. Next. For solar, excuse me. For solar in the proposal stage, including recent VPPA, the corporate PPA bidding in a proposal, the submission that has been delayed by 3 times already now is sometime in May. Together with that and rooftop, we are looking at the proposal of another 108 megawatt. Shortlist and negotiated is some of the very shortlist project that we have is 35 with 7 megawatt. PPA and term sheet that already executed 17.6 megawatt, which I think currently completed. There is a 300 megawatt, 300 kilowatt is already COD, and we are getting revenue from that. And the next one that completed is 2 megawatt should be COD in the next 1 month or so. Sorry, in May, in next 2 months in May. So for hydro pipeline, in the pipeline, looking at the opportunity 40 megawatt, shortlist and negotiated is 9.6. Actually now is 12 because that river actually can do 12. We just been informed by PLN, this is in Indonesia, that we have to do 12 instead of 9.6. So is this likely to gonna change now that we're gonna increase the capacity to 12 megawatt as a full hydro and no longer a mini hydro. Next, in terms of water treatment plant, prelim opportunity is 19,000 cubic meter. Shortlist and negotiated is 2,560 cubic meter. Concession agreement and letter that is signed. We're gonna sign this very soon, maybe this week, next week is 1,600 cubic meter. This is for Unilever in Indonesia. Next. ESG sustainability. So we are closely monitor our commitment towards economic, environmental, and social with all the KPI set as per here. Next. Some of the CSR that we do mainly with a civil chapter of SPE in oil and gas and community in Kemaman and East Malaysia. Next. That's all from me. If there's any question, thank you.
Mr. Tian, maybe I can ask you. I can start by asking you, how many Petronas-related projects or wells have you performed so far?
Wells,
Mhm.
more than we perform a lot of wells. I cannot remember hundreds and hundreds of wells since 2018. So
For
okay,
Petronas?
for example, I give you an example of what we do. So we do a seed line perforation, for example. So in a well, right? So you have multi-layer of reservoir. So when Petronas or any client they go to production, they will pick the best reservoir to do the production first. But there is still small reservoir, and on top that they will come back and do. So a lot of time we do go back into the well to re-perf if there is any plug or add perf in a higher zone. So in one well, for example, we might do multiple job. We might same well, I might do, this year go into this well, shoot a perfect zone, and the next year we'll perfect a different zone. So in terms of that, I mean, if we calculate by that, it's hundreds and hundreds of well and thousands of perforating run that we have done for Petronas over the past 10 years.
Usually, when Petronas announce their activity handbook, which is 2023 to 2025, that there will be 96 wells that will be drilled. Let's say they announce in recently, in March, if I'm not mistaken. How soon before it will trickle down the projects to the players, like a well player like you?
Okay, when they said they drill a new well, those are development. When they start drilling, then we will participate in well testing, for example. If they do well cleanup and well testing, the moment that they drill the well once they complete the well, so you drill a well, it'll take say a new well platform, you drill a well, it will take maybe 3 to 5 weeks, depend on whether they do batch drilling. If they do batch drilling, they drill 4 5 well and go complete, it may be 2 3 months, then you go into a completion phase. That's when we do perforation, some slick line work, and some well testing for us.
No, I mean, usually, how long does Petronas take to actually award you with a contract after they announce the
They already
this?
have contract ongoing for different type of services.
I see.
So
For
they
this
don't
96?
they don't go for like a new well, then I award a new contract. But they for those drilling of a new platform, right, development, they will award the new rig to do those drilling of participate. But there's other services for us. We already have ongoing contract, so they just call out the contractor to do different type of services.
I see. During the oil downturn, was there a negotiation of contract that you reduce the value of the contract? Is there anything during the?
During the downturn, yes, there is some small reduction. Some are asking for 5%, 10% discount.
I see. But
Those type of
during the upturn of oil price, is there a revision in your contract as well?
for my contract, unfortunately, no. We asked for it, but we have not received any feedback on the uplift. Well, that's life. Petronas is always like that. They ask for discount, but they never give you back.
I see. Who do you consider as your competitor, yeah? In this niche market?
Okay, for perforation, our competitor is USMA. The listed coal is USMA. Of course, the MNC such as Halliburton, Schlumberger, and also local company, not listed ones, companies such as GeoWell. We compete a little bit with Delium as well in perforating. For wireline, we compete with Delium services for stick line services. For well testing, we compete with USMA again. So for listed one, mainly is USMA and Delium. But we do complement each other. We do work as a subcontractor, even we compete in some services. Yes.
Mm. You have been in the industry for so long, starting with Halliburton. Your view on oil price direction? Or do you think with the current development of OPEC's supply cut and all, do you think that oil price can reach 100? Is it possible?
I think it's still possible because of still well known in the industry of underspending in development. The demand is not slowing down anytime soon, even though we're looking at a lot of slowing down, but the demand is still there. Demand is still growing, but the supply wasn't grow as fast as the demand in my view. And alternative energy such as RE and all that, it's just not fast enough to replace what fossil fuel energy can give to the industry for the growth. That is what I see. I think that it still will be from here this level until even or over 100 in the near future.
Biggest reasoning that we see conducted by the central government of China. Yeah, and this is very, very supportive in terms of the property market. And coming to early January this
Afiq, do you have a question or? All right. On that score, do you have a base case support level for oil price this year? Your view, being a key player for the in the oil and gas industry. Currently, it's trading at, I think, about 85.
85.
85,
Yeah,
yeah.
yeah. I thought 80 was a support level, but the other day it actually dropped below that.
I see. I see. So, as long as okay, the capex spending for major oil player like Aramco or Petronas per se, what would be the comfort level for them to continue with their capex oil price? If let's say oil price drop certain amount or something, can you give your view?
Actually, their lifting costs, especially in Aramco, I think in the Middle East, is actually much lower. I cannot remember Petronas. Some of our client here, I think their cost per barrel is actually around 30 or 30 something, or maybe lower. It's actually quite profitable for them.
So the higher it goes, the better lah.
Of course.
Yeah. If I'm not wrong, if I recall correctly, Saudi Aramco, their cost is something about USD 20 per barrel. That's why they can cut their price. Petronas, I
Right.
think, if I'm not wrong, is about 40. So that's why the recent quarter result for Petronas, it was a very bumper year for them. Yeah. Maybe you can go a little bit more deeper on your ESG initiative, Mr. Tian, while you are in this forum.
ESG initiative. I mean, we are going into a lot of investment into renewable energy, especially for example, we have a corporate client like we do Celco, a PPA, private PPA, whereby we invest on the rooftop solar and sell it back to the client. We have one client in Penang where we are building right now is for Ostrom in Penang and some the design village, and there's a couple more that under negotiation. So those are part of our initiative towards the ESG by doing a lot of investment in IE space, and we also going into renewable greenfield wastewater management. There's anything that is sustainability related. Those are our investment. We are particularly paying a lot of attention in that space.
Can you share how much do you spend for ESG initiative? I mean, do you have some guideline? Could it be 10%,
Uh,
5%,
I think at the space of about 10%. As
10% will be channel for ESG expenditure
yeah, yeah,
of revenue?
revenue or I mean investment and rest of it.
I see. Maybe
Uh-huh.
before I pass the mic to Azim for, I think he has some burning question to ask. How about diversity in your company? Is there any diversity initiative for ESG? The board
Uh,
members, the board
Board member,
members.
we do have complying with BUSA recommendation of diversity, and I think we are quite balanced in terms of our staff in the company. As you aware, as I'm aware that we are quite balanced in terms of diversity in male, female, and different ethic and all that. We are quite balanced.
Quite balanced. Okay.
Yeah.
We have some question from the chat room.
Mhm.
What is your long-term vision for the company and specific target on how much RE capacity you are looking for in the long run?
RE capacity, actually, my midterm target is 100 megawatt in 2-3 years. So hopefully by us going into hydro and other stuff, we should meet that in maybe 2025, 2026 to have 100 megawatt of uh, on build or acquisition. So that is our long-term target.
Long-term target for long-term vision for the company?
As I mentioned earlier, we are switching our business model from pure service provider to a more service and concession type of business. The reason being that you'll notice that for us as a oil and gas service player with a lot of core contract, is a lot of time is driven by activity by clients, so the revenue could go up and down pretty drastically. So with concession type of business, so we have recurring income, so it's a more predictable type of earning for us. Hopefully, we can stabilize all our earning and start to give more dividend back to our shareholder.
Another question is that rumors have been circulating that you are linked to some political affiliation in Sarawak. Now, that is to me is okay. However, how do you have a proper framework on how to overcome political obstacles? Because political obstacles can be a positive to you and a negative to you somehow. So do you have
Yeah.
how do you handle
We
this?
don't have a we don't have a framework. I think the rumor come about is because we are a Sarawak company. Of course, we are a Sarawak company. We participate and our chairman is also very active in Sarawak, not politically, but very closely in Sarawak business. I think that's how the rumors come about, and and the fact that our early investor was some public figure that linked to politicians, that might be the reason why there is a rumors, but in fact there is no political link for us.
So it's actually only a rumor lah,
It's not a rumor because early days, our investor before we listed, I mean early in 2018 to I think 2021, when the exit shareholder is actually linked to some politician. As a matter of fact, his brother is a deputy prime minister today. So that's how the that's how the rumor come out.
I see. One last question for me before I pass to Azim. What's your view and your take on your financial this year? I mean the first quarter results coming up, which is in May, and how do you think your company will be performing for the full year?
We should be positive in a full year. That's what I can say. We are quite very confident we will be positive in the full year.
Could it be better than last year? Given that last year could be some disruption from what they call COVID related.
Of course, we as I mentioned earlier, we changed our financial year to June. So you're going to see 18 months probably slightly positive 18 months, and then moving forward because there's a lot of other RE business that are coming, so we should be the future year should be much better.
Your dividend policy, do you have official dividend policy?
We don't have a dividend policy as of now. As I mentioned earlier, well, we are changing our business towards more retaining income type of business. Once we have all the concessions start to come in, revenue to come in, then we will looking into setting a policy in the future. But at this moment, we still use up most of our earning to reinvest into expanding the company.
Okay. Azim, do you have a question to ask?
Yeah, so I think, Titian, can you explain a bit more detail about your new ventures? I mean, your wastewater treatment.
Okay, the wastewater treatment is a build, operate, transfer a 10 years contract with Unilever in Indonesia. So there will be two part. One is wastewater. The second one will be raw water treatment that we are negotiating right now. And then we have other waste treatment, not in Malaysia, it's all outside with opportunities such as municipal water for Philippine Manila Municipal Council in the negotiation, and some pharmaceutical company in India and Middle East in negotiation to do wastewater treatment. There's a couple of plant near where Unilever is that is have the same type of requirement that we are targeting in Indonesia. So those are one of the new venture. And also in terms of hydro pipeline contract, the current one that we already have the permit to start to nego for PPA we have to change some documentation because last time was for 9.6 megawatt, but now they said they told us the river can do 12. They want us to do 12 instead of 9.6. That's the reason because of the ruling last time a foreign company cannot hold more than 49% for hydro. That's why we try to build it smaller and treat as mini hydro. But now the Indonesia government has changed the ruling. Now we are allowed to hold more than 49% and for hydro as well. So we'll go back and do a higher capacity 12 megawatt. But the same river upstream, we can do another 30, 40 megawatt. Those are in the feasibility study right now. Okay,
Yeah. So then, what's the timeline that we should look at in terms of earnings from these new ventures?
The wastewater treatment plant, the first one, the COD is Q4, end of Q4 this year. So it's by early next year we should see some earning coming in. For the hydro, 18 months from the time we sign PPA or less. It's actually quite fast to build. So I was actually in Jakarta yesterday and meet up with one of the, I think they are the second largest hydro owner in Indonesia, Kencana Energy. So we have a chat with the owner himself, the CEO, Henry Marawi, and try to understand the space in Indonesia. So it's pretty exciting that the contractor that they shared with us can actually build the hydro pretty fast and pretty efficient. They have always over their whatever they plan for. So it's pretty exciting.
So what kind of JV again that you are looking at with the partner in Indonesia?
No, not a JV, because they have a subsidiary which is a EPCC in building hydro. So we are looking at using them to build our hydro. So we're not JV with them, but they are our contractor, and try to understand their capability. And it's pretty exciting to know that they have built successfully 4 hydro right now, and 2 ongoing with a very high success rate.
Okay. So I think do you also looking at hydro project in Malaysia?
We are exploring. So far, there isn't anything that is attractive. The fact that the hydro in Malaysia, the tariff is compared to Indonesia now is much more lower. So we're talking about what, 23, 24 cents in Malaysia, and Indonesia you're talking about 30, 40 cent ringgit equivalent. So investment wise, we think that they are more attractive there than here.
I see. And can I get some sense on how do you start to venture into wastewater? Because I think this is also quite new for you, right? And why do you choose this business?
Actually, there is a bit of synergy in wastewater treatment because we have a specialty chemical. Wastewater treatment is 2 front. One is chemical, one is mechanical. You have some equipment there, and there's a bulk of it. Actually, you need to use chemical to treat the water. So Reservoir Solution is actually a specialty chemical company, and we have a lab in UN. So there is some synergy that we can grow from there in terms of wastewater treatment. So we don't have experience to build a water treatment plant. That is why by the opportunity here now we have a partner that can build, and we can participate in terms of in chemical solution.
Okay. And now now that you have multiple business, right? So how do you manage your business planning in terms of your human capital?
We have frontline manager that handle each of the different services. And in terms of like hydro power plant management, there is a operation and maintenance contract in place. So we don't actually manage ourselves, but there's a O&M contract in place, and we have a project manager or project director to look after different investment in concession. So a lot of concession management O&M, there's a contract in place. We don't have to manage the day-to-day operation. We only manage at the at a higher level.
Okay, Hazim, hang on for a while. Hanafi Zamali, which is our head of sales, have some question to ask. Hanafi? Hanafi, you have a few questions to ask, right? Okay, before he fix on his technicalities, let me ask you on the first one. Hanafi is asking, is it true that the Petronas, the margins from Petronas is being squeezed from you, given that you are also with Petronas clients?
I think it's a fair comment to say that it's been squeezed. over the years, because of fierce competition between competitors as well. And I think an example always we use is like, for example, like a equipment type of service contract, like a stick line contract, that a lot of contractors have. The stick line contract is for 2+1 year, but they set in the requirement that your equipment is must be 5 years or less. So every 5 years you have to invest on huge capex. You're talking about 30-40 millions of new equipment just to satisfy their requirement, but they are passing that to you, but with a shorter contract. I think that has unfair to a lot of service provider in Malaysia. We as a service provider had through the association, telling Petronas that something need to change. It's actually a lot of squeeze to contractor.
Well, usually when you request for better margin, is it possible to get a revision, or it's just at
It's quite subjective. Sometimes you get, sometimes you don't.
Oh, okay. So it's not a no lah. It could be a yes, it could be a no.
It's a more no than a yes.
More no than a yes, huh? Okay, all right. All right. Perhaps one last question. We understand that you have to rush for another meeting. One of the participants would like to know that more details on water treatment hydro pipeline contracts. I think you mentioned
Yeah,
a
I think
bit.
I have. I covered that.
Yeah, can you
already.
just reiterate back water treatment details and hydro pipeline contracts? Yeah, maybe technical stuff. Maybe they take some time to understand.
Yeah, water treatment is basically we will treat the water from their oleo chemical plant for Unilever to a standard that they can discharge to their local water discharge to meet their requirement. So they will involve in some mechanical and chemical treatment. So this is a build, operate, and transfer. So we will charge them by per cubic meters of wastewater treat. There's a minimum that we charge. I think was the 1,260 cubic meter per day, minimum of $4.60 per cubic meter US. There is a minimum pay they got to pay us to treat the water. Regardless of amount, minimum is 1,260. So we'll operate for 10 years and we'll transfer the plant back to Unilever. So this is wastewater treatment, and we're going to build another plant for them to do a raw water treatment, to treat the raw water.
Oh, hydro pipeline, yeah.
Hydro is hydropower. This is a 12 megawatt hydropower in Aceh, Indonesia. So we are target to sign PPA in the next maybe 1-2 months and start to build it. It will take about 18 months to build. It's not like a dam, you just divert the water through a penstock down to your powerhouse. It's not the dam type of house, so it's quite fast to build. And this project is a ready to build project. Once we sign PPA, the land, everything is ready. We just need to appoint contractor and we can start building.
Just one last question. The state government is very supportive of Sarawak state, Sarawak companies, right? I mean, do they
Right.
give you incentive for whatever assistance that you need?
Not incentive per se. Some of the contract, for example, previously there is some contract value that is 10 million or less. They only invite Sarawak company to participate. If there is more than one Sarawak company for that particular services. Of course, if it's only one provider, then they will open to others. If not, they will be only invite Sarawak company to participate in that sense, not subsidy.
You managed to get a contract from Sarawak Energy?
Sarawak Energy, no, not yet. Sarawak, because Sarawak Energy, because we do mainly solar. So far they only have one floating solar that they award to a China contractor. But we did participate in the subcon work, but there's no result yet.
I see. Okay. Okay. For all the participants, if you have any questions for Mr. Tian, you can direct to Azim, because Azim is covering the stock. He can convey the question to Mr. Tian, and I'm sure Mr. Tian will be able to answer. So other than that,
Yes.
Mr. Tian, thank you so much for able to make time. I know you just come back. I just came back from Indonesia yesterday. I'm sure you know there's some fatigue there. But then again, we truly appreciate you spending about 1 hour, 1 hour plus with us. And we do hope that you'll be able to participate in our corporate day, future corporate day. And with that, we thank you. Mr. Tian, thank you so much.
Thank you.
And yeah,
Welcome.
okay. All right. The next presentation is by T7 Global. Yeah, just a little bit before Mr. Tan K. Vin upload the slides about T7. T7 order book as at 22 year end is 2.6 billion. They are currently busy with their new contract from MAHB. They currently have two more pool, charter and one maintenance. And they also do integrated well services for well abandonment and platform maintenance contract. Yeah. Now a little bit on Mr. Tan K Vin. He is the executive director of T7 Global since more than 5 years. I mean about 5 years. He is currently heading the corporate affairs department of the company. He joined T7 in 2015. um, Prior to that, he held various positions in financial institutions, including Maybank Investment, Malayan Banking Berhad, Mitsui Insurance, Pricewaterhouse. He also currently serves as the board director of Malaysia Aerospace Industry, and then also a committee member of Malaysia Crime Prevention Foundation KL. Mr. Tan, are you at the lobby? Maybe you can start.
Hi, good morning, everyone. I'm Kevin. So thanks, Puan Rosnani, for the introduction. Okay. So first, let me do a brief overview of our company profile. So T7 Global. So essentially, we are known as an integrated energy solutions provider. We also have aerospace, metal surface treatment, and infrastructure construction. We were founded in 1990. We are also listed in the main market of Bursa Malaysia. Currently with about over 500 employees, and our order book stands at 2.6 billion. Next. So a bit of our corporate milestone, T7 Global. Many of you may be known as last time as Tanjong Offshore Berhad. So since 2016, we have rebranded ourselves to T7 Global Berhad. And over the years, we have also introduced new businesses to the group, and more towards the more recent years. Over COVID, fortunately we have also had a fairly good 2 years, more contract replenishing year for us. So we have over 2 years we have secured more than over 1 billion worth of jobs in the sense of integrated well services, O&M, and also our mobile businesses. Next. So T7 Global, we have about 7 locations. Our headquarters station in Jalan Tun Razak, Trillion Corporate Tower. So we've also in all the major oil and gas areas, Kemaman, Terengganu, Sarawak, Bintulu, we are there. On top of that, we also have a small workshop in Lumut to service ship maintenance, and also our aerospace facility in Serenda, Selangor. Our board of directors, we have 3 executives. Dato Sri Nick and Tan Sri Tan heads the company as our chairman and deputy chairman. Myself as the executive director, and we have 5 independent non-executive director, various range of expertise and corporate advice. Yeah, thank you. Next. Our management team is led by our Tan Kei Zwin, Group CEO, and also Mr. Ong Fee Peng, our Group CFO. Also Mr. Asman and myself, we both head the energy and myself as the aerospace division. So next is our business division. So we have three main division in T7 Global. So energy, aerospace, and construction. So in our energy, oil and gas, we have our EPC division of O&M, offshore construction services, integrated well services, specialist products and technology, and recruitment and manpower. And our aerospace, we are mainly focusing on our metal surface treatment facility, where we do surface enhancement treatment before the aerospace parts are being assembled into the major aerospace parts. Okay, next. So we have a various list of customers. So Petronas, Shell, yeah. Next. So T7 Global in a nutshell, we are mainly focusing our business in the upstream businesses, where our EPC, offshore construction, IWS, and also O&M businesses. So of course, our specialist products and recruitment manpower, we can also extend our services towards the whole supply chain of the oil and gas, within the oil and gas. Next. First of all, let me bring you through a brief summary of where are we in the offshore operation. So first of all, our MOPU businesses, we have our T7 Elise, who's currently in the Sarawak Bintulu. So which will be starting our operation maintenance over the years as well. And our newly secured Nong Yao MOPU in Thailand, which we have also started our construction. We target to deliver this by end of the year to our client. Also, of course, our traditionally bread and butter businesses, our O&M businesses, which we are currently serving Charigali Hess and also Hibiscus, as shown in the map. So of course, we have also have our IWS businesses in M3 and also Kinabalu workover and PNA services. So our first division is the EPC. So TOS Tanjong Offshore being one of the pioneer for mobile production facility solution. We have recently secured we currently have two MOPU contract ongoing, one by Petronas Charigali and the other one in the Bush Rakam field in Thailand. So T7 Elise is already complete. We already complete our construction and currently in the field right now. Also, our Thailand field, our Thailand MOPU, which are under construction. So a bit of background of one of our major contract for T7. So this is a Bayan field MOPU, as you see in the picture. This will be a 10 years leasing from Petronas Charigali. So will be responsibility to operate and maintain the MOPU over the next 10 years. And this will be a gas MOPU. It will process the gas coming out from the Bayan field. Next. Also, our newly secured MOPU, where we are 5 years leasing contract, and this will sit in the Nong Yao field in Thailand. So currently, this is under construction and target to deliver by Q4 this year. Next is our bread and butter division, O&M. So essentially, we have the expertise and team to do we have extensive track record in this area. So currently, we also participating about 3 contracts besides our MOPU, 3 maintenance contract, long-term contract. Also, our IWS division, who was said to be our rising star division as well. So looking at the activity, Petronas activity outlook, more and more wells will be decommissioned over the years. So we as being one of the contractor in this field, we target to do this more and more over the years as well. So our offshore construction services, we also provide various services in the offshore construction field. So for example, we have introduced the ROV, remotely operated vehicles. Underwater drones is essentially to do various inspection or maintenance services for underwater platforms. So this is a very good cost-saving initiatives as well for our clients. So which we will target to serve more and more oil players in the region for this as well. So our last two divisions. So over the years, we have had many OEMs partners that who have worked with us, as shown in the screen. So we target to also continue to market their products and strengthen our relationship for these products, where we market their products to sell to the oil players in the region. So lastly is also our recruitment, where we also have provide manpower to various companies in the energy, in the IT, and also the construction division, construction areas. So that brings us to our second division, so the aerospace division. So we have set up this facility in 2016. So this facility essentially we are focusing on metal surface treatment. So essentially all the metal parts before that being assembled into to the complete equipment, aerospace equipment, or eventually the plane. They have to go through some sort of treatment, chemical treatment. So which is where are we today? So currently we have gotten all the relevant certificates, NetCap, AS9100. Also, we have gotten approvals from our various clients, such as Boeing, Collins Aerospace. So currently, our tank size, we can service up any metal part up to 3 meter, and our capacity can process up to 10,000 aerospace parts per month. So a bit of our capabilities. So we do surface enhancement, non-destructive testing, chemical process, painting, part marking. So these are some of the key processes, essentially focusing on the chemical processes, where we have 42 different types of chemical tanks to go through all our treatment processes. On top of that, also we do more than 90% of the testing on our own in our own lab. So we are able to control our variables better in the facility as well. So our third business is construction. So we have also started this since 2016, where we are able to initially service our own group's construction needs. So we build our own aerospace facility, etc. So over the years, the construction team also have a few opportunities. So for example, they have just completed the Endau Mersing fish processing park. So this is situated in the Endau Mersing in Johor. So it's seen on the picture on the top. So late last year they completed this, and now after that they've also secured the baggage handling system from KIA, also late last year. So moving forward, they will be focusing the next 3 years on this project. Next. So this is the project I'm talking about. So this is a new highlight for us. We have managed to secure this together with our partner, as a consortium, Siemens Logistics. So this project essentially entails the upgrading of the whole baggage handling system for KLIA. as a baggage handling system is one of the key infrastructure for any airports. So this is will be a very good upgrade to ensure that our national gateway can still cope with the upcoming traffic that's going to come through this airport. So lastly is third is our financial highlight. So we're proud to say that as our announcement a couple of months last month, so our 2022 result, we have hit a record high of 365 million in our revenue. Also same goes to our net profit as well. So with almost a double of our net profit since last year, 2021. Same goes to our quarterly. So traditionally we have a stronger quarter four. So if we just compare the quarter four, we have also have quite a significant growth, even both in PATAMI and also revenue level. So a bit of a highlight snapshot. We have seen that our total assets have grown to about almost a billion already. Of course, that's come with higher liabilities as well. But our group sees quite comfortable to be sitting on this gearing ratio currently on the 2x gearing ratio. So on a bit of business updates, these are all the business updates contracts that we have announced over the past year. So just to highlight a bit, I think just earlier this year we've awarded from Hibiscus for the offshore decommissioning project, and also we have received our LA for the manpower services as well. Okay. So our future plans. So our energy, we target to build a sustainable base of energy assets, which will bring us a long-term recurring income. So this goes along with our partnering, continue and enhancing our relationship with global OEMs to always focus on more automated and digitalized solution. So on top of that, our ESG initiatives, we will focus more on plug and abandonment and decommissioning activities to start our ESG initiatives as well. On our aerospace and construction, so we also target to focus to achieve optimum rate for our aerospace facility. And construction, for us, we will focus on executing the baggage handling system projects. Okay, thank you. Thank you, everyone. Yeah, so Azim,
Okay.
Thank you, Kevin. Hang on, Azim. Before Kevin, thank you for your position. Before we move on to the question from the floor, can you go more detail on your contract from MHB for the baggage handling system? We understand that this is a new one for you. So you mentioned that the contract is from 2023 to 25. Does it mean that MHB will change the whole baggage handling system and replace by the one that you and Siemens are working? What does it mean? Meaning, it will end at 2025, or how does it work on the contract?
okay, so this project will be a 3 years contract. So yes, you are right. We will be responsible on upgrading the whole baggage system, all the way from check-in to all the way to the plane, essentially. And then for the plane arrival, from the moment the plane arrives, so we'll be responsible for the baggage from there to the baggage reclaim carousel. Yeah, for the air traffic passengers. Yeah, for passengers. So yeah, over the 3 years, we will be doing this by 3 phases. So to upgrade the whole project, the whole baggage system.
Is it a JV 50-50 with Siemens?
Um, Of course, we have roll out a scope split between among our roles. So uh, we we have our own scope to do. So this will be a fair share lah, among us. So Siemens, of course, they will be mainly definitely the technology or the rest or the technology will be from them. So T7, on the other hand, we will be more focusing on all the local construction services and procurement that's required for this project. Yeah.
This could be the what do you call the starting point for more bidding that you can do in all other airports. Are you also looking for the same one now that you are doing this for a major airport, which is KLIA?
Definitely. So we are open for more and more this project. So definitely we are constantly in the lookout for more opportunities in this area lah. So Siemens also, um, yeah, interested to look into this. Yeah. Even local or even regional in this sense. Yeah.
On your current order book of 2.6 billion, before we move on for that, can you share your tender book value?
So currently our tender book also around 2 billion.
2 billion. And then the burning rate for 2.6 billion, I would say 4 years.
Burning rate, actually, our longest and also the major contract is up to 10 years. So I would say we can safely almost 10 years lah. This uh, 10 years for contracts. So traditionally our MOPU, our buyer MOPU is about 10 years. So and it's one of our largest contract in our group. So the remaining contract, our maintenance, our other MOPU projects can go up to 3 to even 5 years. So traditionally, I think good to say our burning rate almost 10 years. Yeah.
Are you also facing some margin squeeze for Petronas contract, or is it like a special case only? Because that is what we discover from the market, that Petronas has been squeezing on the margin.
Definitely, we are not so special. We are definitely always on the verge getting squeezed by Petronas. But of course, we also have our fair share to negotiate and also some of our costs lah. So we we are we are always constantly improving our margin lah. Yeah.
Your allocation for ESG, can you guide us like how many percent of revenue that you spend on ESG initiative?
We don't have I don't have the guide, but we are currently on terms of ESG. So our short-term initiative, we are focusing a lot of our plug and abandonment decommissioning activities. So some example, we do rig to reef initiatives. So after the wells are being decommissioned, we actually do some modification and throw it back to the sea to improve the marine life lah. So in that sense, on the ESG initiative, we are trying to improve the marine ecosystem. Yeah. So by focusing on the P&A and also decom projects.
Okay. Any guidance on your financial? I mean, the recent quarter was very good for you. Net profit jumped so much. What do you expect for the full year? At least, I think you're turning around very well.
Yeah, I think our management. I mean, our team has been laying this foundation for quite a few years now. So we for now is all about execution for us. So we have a lot of projects ongoing. So we have to ensure that we are delivering all this on time, executing all the projects on time, so that definitely we will achieve a better high, a new high this year. We are confident, and
Financially, yeah.
yeah, we are confident that we will continue to achieve a better new high lah.
Uh, Your view on oil price as a key player?
Mm, okay, I would say I don't have much comment on oil price. We can't comment much, But I would say, if the oil price stays within 70 to 80, we'll be very comfortable. I think we are comfortable with this level. On top of that, I want to highlight is that a lot of our contracts also doesn't really peg to the oil price. So we are confident that, for example, our MOPU contract, it doesn't peg with the oil price. If doesn't matter whether the oil price is high or low, the charter rate is still there, lah, for example.
I see.
So
So even
that,
if oil price drop below 60, there is no risk of early termination to existing contract?
so for our MOPU contracts, for example, the years are firm. So whether 5 year, 10 years, so if there is a risk of early termination, we will be compensated lah. Yeah, with a agreed termination fee,
I
which
see.
which all
So
stated in the projects lah.
uh,
So in turn also if there is more, if the oil price do reduce, I think we can foresee more our plug and abandonment and also decom activities to increase. So if we see the oil price will drop, then traditionally more oil players will shut down their platforms, etc. So that on that sense, our P&A division will also increase in the activity.
so there is a clause that even if your contract is terminated early, you will be compensated fairly lah
Yes,
for yeah.
yes.
Oh,
And
okay.
it's all agreed on the contract before before the signing, yeah.
Okay. Your dividend policy, can you share, Kevin?
So currently we do not have any dividend policy, but we do try to give dividend whenever is possible. But however, I want to highlight, once our cash flow start to stabilize, so we see, for example, both our MOPU start to stabilize, we will formulate some sort of policy for our shareholders.
Mm-hmm. Which could be this year because I think you guys are doing so much better this year.
Definitely, I think this is a very common topic among our management or even board meetings. So definitely, it is in the plan for our management to roll out. So I will keep in tune now for good news.
Okay. Azim, over to you.
Hi, Kevin. Just to follow up on the early termination, right? You say you will be compensated fairly. Will that be enough to pay all your debts, the project
Yes.
finance?
Yes.
Okay. Okay. And also, I think that's all from me, actually. Yeah, that's it. Tunani?
Kevin, your last your guidance going forward financial wise, going forward now that everything is actually doing okay for the company.
I think I not much I can guide here, but we are confident, looking at, what I would say is, both our MOPU have not officially kicked in. So whatever we are doing, even with our recent 2022 result, that is without our MOPUs officially kick in yet. So if that's all those are numbers from our brand butter O&M business and also our IWS businesses so far. So if this year, next year, both our MOPU start to kick online, I believe reaching a newer heights is definitely in place for us. Yeah.
The more than 100% jump in your bottom line recently was not included the MOPU contribution, is it?
Not yet.
Okay. Oh, then it looks very, very great for you going forward now that two MOPUs are up and running. Yeah. So I know you cannot
Not
guide,
yet,
but
but yeah, by then it will be. Yeah.
I
By
see.
the moment the two MOPU officially come in, yeah, we can imagine it's a very good. It will be a even better year for us. Yeah, that's my point. Yeah.
Okay. All right. Okay, to all our clients, we do cover the stock. Azim have a buy call on T7. You can refer, he just initiated the stock actually, but you can see his initiation coverage report and also his quarterly result, which was just released recently. So other than that, Kevin, thank you so much for
Thank you.
joining us today, for making time to answer question and also give an outlook for your company. Thank you, Kevin.
Thank you, everyone.
Thank you.
Thank you.
Kevin.
Bye bye.
To all the participants, especially to Bank Islam, BIMB Securities and BIMB Invest, this is also part of learning hour. We are now flashing the QR code for the QR code. I think my team will flash the QR code shortly for you to register under the learning hour. Yeah, my team will flash soon. Okay, just a bit of announcement. Okay, this attendance and cost evaluation is actually flashing now. This is, don't forget, for those that actually register with the course or the webinar for CPE points, please do your assessment. That will be open a week from today. It will close a week from today. Now, there's another announcement that we're going to make. Okay, the attendance and course evaluation is, the QR code is being flashed now. We are also happy to announce that we have our fifth corporate day that will be held 15 May. You can see now that we flash it now, 15th of May. It's on East AG topic. Will we are happy to share that we managed to get the key leaders' opinion, which is Dr. Nur Mazila. She will be speaking on the financial reporting on ESG, and also Datin Dr. Vijaya. She'll be talking about a net zero roadmap. Now, what is it? Net zero roadmap is something that once we release the carbon, we need to recover back the carbon, and how can we do that lah? Okay, so it's going to be on the 15th of May, which is on Monday. This is quite likely we are getting our approval from SC as we speak to get the CPE points. I think by the next 2-3 weeks we'll be able to get the approval from SC. So now, as usual, is start from 9 o'clock until 12:30. I think it's going to be a very interesting what they call presentation from both doctors, Dr. Numazila and Dr. Vijaya, and we hope you are able to join us for our fifth corporate day for the year. Then next year we are looking about maybe 3 or 4 corporate days. So other than that, thank you so much. If you have a problem with anything technicalities for your CPE registration, for your post assessment, whatever it is, the numbers are flashing now for you to contact the research team, and we will assist you with whatever that we can. Okay, for all the Muslims, if you're not too early to say selamat berbuka puasa, and also selamat Hari Raya. I know it's 2 weeks from now. Thank you for joining us, and for the rest, thank you and have a nice day.